Fantastic. Well, let's get started. So we're going to be answering the questions at the end of the webinar, but obviously if anything comes up that you think of during it, if you can please pop your questions in the question and answer button at the bottom of your screens, and we will address them at the end if we haven't covered them during the presentation. So to get started, so we're going to talk about the domestic reverse charge rules that are going to come into place on the 1st of October 2020. Now, this is affecting businesses within the construction industry scheme and the way VAT is paid between subcontractors and contractors. So for many of you, you may have been preparing for this for the 1st of October last year, and then it got postponed right at the last minute. And yes, there is a possibility that it could be postponed again because it is incredibly difficult times for businesses with all the upheaval at the moment and a number of changes that we're all having to adapt to continue to work. But we always think it's better to be proactive and have a plan in place rather than reactive. So, apologies, got a bit click happy. So why are they implementing this change? They're trying to reduce fraud in smaller businesses, and I think there's been a real heavy emphasis on this throughout the COVID campaign, that a lot of people that they're aware that a lot of tax is lost through fraud, and actually their figures state that 12.5 billion is lost in VAT throughout the UK, and they believe that over 50% of this is related to the construction industry scheme. And I'm sure many of you will have had customers or in the past that have knocked you for debts and wound up, and they're the ones that tell the wonderful stories down the pub where they've earned all this money, they've not paid a penny in VAT or PAYE, and then just sunk their company. So this is what HMRC are trying to stop. And obviously, as you all know, they're paying out a lot at the moment to try and support businesses and try and reduce the risk of redundancies, and they're going to have to start reclaiming some of that in tax. We're probably hoping that they try and reclaim some of that in the tax lost rather than putting up everyone's tax rate, but we've all got to be prepared for these changes. So who's affected? So it's businesses in the construction industry scheme who are VAT registered. So that's subcontractors who are undertaking VATable services for contractors, and contractors who are employing subcontractors for VATable services. So who isn't included? That's businesses who are not VAT registered, contractors that are working for the end user, work on zero rated work like new builds, or if you're doing work with connected companies, so companies that are under the same control as you, and material only supplies. So it is unlikely to be a case that this is either going to completely apply to you or not apply to you. You're going to have to look at it at a contract or invoice and job basis on each one. So just to run through kind of the supply chain. So you've got VAT registered subcontractor, VAT registered contractor, but the end user is a new build. So actually there's no change to the VAT there. Then on this slide, as you can see, someone in the chain isn't VAT registered, so there's no change there. And if you're a subcontractor or a contractor working for the end user, supplying VATable supplies, again, no change. Same owners, no change. Providing materials only, no change along the chain. So where this does apply is if you are a VAT registered subcontractor working for a VAT registered contractor, your end user is dealing with VATable supplies, then these new rules apply to all of you. So for subcontractors, what is changing? Now your invoice is going to need to show that no VAT is now payable, but you will need to state somewhere on that invoice, and we'll give you an example of that later, the VAT that you would have charged previously. When you enter this into your accounting records, there'll be no VAT on the accounting transaction. So you will need to change the invoice layout, and there will need to be new wording. And all of this will need to be put in place to ensure that you have shown that you've followed the rules correctly. So for a subcontractor, this means that the money you're being paid by your customer is going to be 20% less than you're used to. And the biggest impact this is going to have is on your first VAT quarter. It also means that your contractor is going to be holding the VAT money for you as a subcontractor. So I'd probably suggest, given stories like Carillion, that you make sure you do your due diligence on the contractor, and that you make sure that you are showing that you've been compliant with the rules and clear on your communication with your contractor. So if you're a contractor, you need to notify your subcontractors regarding their treatment. Some of you may have already received that from some of for other people you work with, or seen it from sort of friends in the industry, but you need to make sure you notify them. So you don't pay VAT to your subcontractors, so you're holding 100% of the VAT. So you've got less VAT to offset on your VAT return. So you'll need to account for VAT owing in your accounting records. And obviously, actually, for a contractor, you're going to have an increased cash inflow in the short term. So for 3 months, you'll be holding more cash than you'd be used to. So I'm going to hand you over to Jo now, who's going to talk through the other considerations that you need to take into account.
Thanks, Em. So as Emma mentioned earlier, with all the changes that are coming in, it's important that we look at the accounting system you've got in place and if it can cope with the new changes that are there. So first of all, if you're using manual records such as Excel, or whether you've still got them on paper, then you're going to need to look to change these and get away from them. It doesn't give you a fluid system to manage the contracts, and it probably doesn't hold up to the new VAT rules and the changes that are in place. If you're on another system, you're going to need to check this. This includes cloud-based systems. You'll need to check whether they comply with the new rules. There should be some explanation out there online which denotes whether they're planning to put the change in place and when that will be done. We've checked with the 3 big suppliers, so Xero, Sage and QuickBooks. All 3 of these have got planned updates included to account for the new domestic reverse charge. So if you're using those, you should be fine. The better accounting system means you can track the labour costs and the material split on your invoices, which can be important if you're providing just materials or you're providing materials and labour. The invoice system, will need to amend the layout. So here we've got an example of the new subcontractor invoice. From top to bottom, from the top to the middle, not much has changed really. I'm sure most of you have seen and raised these invoices regularly. The part that changes is that CIS is included as normal, but there is no VAT to be charged. So typically this invoice would have been 1,200 minus your 200 CIS. You would have been owed £1,000. However, after the changes have come into place, that will now only be £800. Instead, you need to include a new VAT reverse charge clause, which states that it's part of the new Act and that you should have charged £200, but you haven't. As that's the case, you're going to be short £200, or if you're the contractor receiving that invoice, you're going to have £200 more in your pocket, at least for the interim. In this case, you're going to have to look at managing your cash flow, and for subcontractors, improving that cash flow. So the first thing we'd suggest is that you look to extend the credit terms with your suppliers. So whether this be the trade suppliers or other suppliers, it's just to make sure that you can have as much cash in your pocket as possible, whether this be for 1 month or for 6 months. Again, reduce and negotiate your payment terms. If you're offering 60-day payment terms, maybe you should look to reduce these to 30 so you can get the money in sooner should you need it. And if you are reducing them, making sure that it states on your invoice that these payment terms are the payment terms. I've heard a few stories that the big boys can sometimes hold back their payments in excess of the payment terms, but the clearer you make them, the easier it should make managing your cash flow. On top of that, it's important to increase the speed of your invoicing. Typically, most contractors or subcontractors will do this at the end of the month on a monthly basis. You look at the work you've done for that month and you raise all your invoices whilst you're sat at home having a cup of tea. If we were to say, for example, it took 15 days from completing the work to get the invoice raised, it's going to take you 5 days to put it in a post box, get it sent to the client, and there, if you're lucky, they'll pay within 30 days. On that turnaround, that's 50 days after completing your work is when you're getting the work, getting the money in for it. That's a long time to be waiting. You may have paid out on subcontractors, you may have paid out on materials. 50 days is a long time to be waiting to get that money in. Zero allows you to invoice on the go. So when you complete the work, you can raise that invoice instantly, reducing that invoicing time from 15 days to none or 1. You can raise those there and then. These can then be sent out via email to your customers, and you can attach payment services such as PayPal or Stripe, so you can take payment there and then, which hopefully would incentivize them to pay a little quicker if it's easier. If you're looking to take that a step further, you've got services such as ServiceMate, which will allow you to manage your jobs and on-the-go invoicing. So when you complete your work, it will allow you to improve your cash flow, even marginally will help. So next is automating that credit control. As I mentioned, some of the large companies can hold back their payment for quite a while. And sometimes you only seem to chase for the cash if you're struggling. This means your debt can become old before you start to chase it, and it increases the risk of you not getting a payment at all. Chaser offers a automated credit control service, which they provide by the polite persistent pays. This means that the customers out there that just need a nudge, that just need a little bit of a notification, payments due in 7 days, payments due in 1 day, they might just pay you, they might have forgotten to pay you. So this then frees up your time to work with the big debt. And then you can focus on in dispute. It might be that you're worrying about legal, and you can deal with those rather than having to deal with someone who might have just forgotten and then pay. Once you've worked out how to increase your invoicing, you can chase it in. You then need to plan for your cash flow, whether this be surplus or deficit. At some point, you will be affected by a change in your cash flow. Again, similar to the chasing of the invoices, this is only done when the cash is low. However, you need to account for the short-term impacts. It's important to look at the terms that you're offering and the terms that people are paying. If you're using spreadsheets or other methods of managing your business and finances, it'll be difficult for you to work out that you gave company A 30 days, but they actually paid on 60 days. With a software like Fluidly, which is a cloud-based reporting and planning tool, they will do all the hard work for you. They'll do all the resource planning, pulling everything together, and they'll take into account that company B actually on average pays in 35 days and company C might pay in 60 days. So we'll take that into account when working out your cash flow to ensure that you're not always taking the optimistic approach and you have a more realistic tool there to reflect the impact of your customers and suppliers. If when you have finished planning for your cash flow, you find that there might be some shortfalls, whether it be short term or long term, this is when you can look at your finance options, and I'll hand over to Emma to go through the options available to you.
Brilliant, thanks, Joe. So just to confirm, I mean, it's the subcontractors who are going to be sort of short of cash flow in respect of they lose 20% of any VAT that they would have been receiving for that, particularly for that first quarter. So actually, if you're a subcontractor and you're incurring a lot of VAT on your other expenses, you may want to think about switching to monthly VAT returns, just so that you can get a regular refund of that VAT, just to kind of help the impact of this. But you might also want to consider having certain things set up ready for the 1st of October to allow you a little bit of breathing space for the impact. So you might want to consider increasing your bank overdraft facility. It's not always the cheapest or most affordable type of lending, but it can act as an immediate solution. Some businesses may want to look at invoice financing or confidential discounting. I don't know, many of you may be aware of what that is, but I'm just going to give you a bit of an overview. So that's where you sell your debtor book as such to a finance provider, and they will advance you a percentage of that debtor book as cash into your bank account based on your industry and your mix of customers, to just help with that working capital cycle. It's particularly effective for growing businesses, so that you don't constantly have more cash tied up in your working capital cycle. And part of that facility also they offer where they will do your credit control for you, or you get debtor protection insurance, which I think going into the market we're all going to be trading in now. It's a very unknown place. It's hard to know where your risks are, so that could work really nicely for some of you. Or you might want to look at some of the short-term business loans. I say short-term, the business loans that are available at the moment, particularly around the COVID solution. So there's the bounce back loans, which you might not be aware of, that you're allowed up to £50,000 or 25% of turnover, the lower of, over a 6-year period, with no interest or repayments for the first 12 months. Or for a bigger amount of lending, there's the CBILS loans that have also been brought into place off the back of the support that the government are trying to provide. So there are some good facilities out there that are reasonably easily available at the moment for businesses, and particularly that you could take advantage of if you don't already need that lending, just to prepare for the 1st of October. So what are the penalties for failure to follow the rules? HMRC that is unconfirmed at the moment. Their harshest penalties are 100% of the incorrect VAT, but that is often discounted to 40% if the errors are identified upon a visit. And normally the percentage is based on the fact of how how helpful you are during the visit, but also whether they feel that it was a deliberate error and an attempt to disguise VAT from them, or whether this, when you're introducing new rules, if it, these things happen just by accident. But that's why we feel it's important to show on your invoicing and things that you have considered it, and you are trying to comply with the rules as best you can. So I think if in doubt, use the reverse charge. But the penalties are going to be phased in like anything. They give you a period to settle in and understand this. So what are your next steps that we feel you should be taking? Well, I'd certainly be gathering the information you don't have on your contractors and subcontractors. Not everyone has addresses and national insurance numbers and VAT numbers and all of that information for their contractors. You should certainly have that, just in case there's any need for HMRC to try and track the people in your chain along the way. At least then you can be as helpful as possible. But also you want to be speaking to your contractors about what they're applying and the contracts you're working on. And obviously the same for your subcontractors. You want to be telling them how you're going to treat them, so they've got advance warning of any impact on them. So you might want to consider credit checking your contractors. You obviously need to check your accounting system. Apologies. If you have manual or Excel records, I'd really suggest getting set up on a cloud system now. I think particularly in the market we're in, you know, cloud accounting systems are much easier to use and much easier to deal with all the administration, particularly on the construction industry scheme, where you've got regular CIS submissions, regular VAT returns, and just all these changes that are flying at you. So it's much, much easier. Obviously, I'd consider switching to monthly bookkeeping to assess cash flow, just because you just need to know where you are now. You can arrange a follow-up call with us. I think we'll be following up everyone from tonight, so feel free to ask us anything you like. But we've also put together a bespoke report that calculates the cash flow effect to you and gives you some advice based on the type of work you're doing, and the cost of that's 145 plus VAT. So if you would like us to do that for you, just let us know. And then we've also got another webinar next Thursday, which is making money in the new norm, which you might be interested in. So we're covering with Peter Sell, who's a business consultant and advisor in the construction industry scheme. We've got Andrew Price, who's health and safety, James Sargent, who's a specialist in construction law. And so we'll be covering all the topics that we feel will be really important to you at this time. So do sign up for that. I think you'll find it really useful. Okay, so I think we'll open up for questions.